Welcome back to another Stock Market Open. This week is a big start to earnings week. I'm just putting some of the biggest over on, as usual, ehack.com, writing this out here. But Monday, that'll be today, in the PM, we'll have Logitech, United Airlines. I want to be really clear about what we're looking for earnings this season. I think there might be a little confusion. I don't think it's Q4 that anybody really cares about. Now, Q4, let's be clear, is what we are getting earnings on. However, I think what we want is the data from January and March, forward-looking data. And I think that, excuse me, will help us either sustain this sort of crazy NVIDIA rally that we're seeing now, or it all collapses. Mostly because I think the forward guidance from companies, as well as the commentary from companies, will give us a lot of insight into what's really going on with the consumer. There is some belief that possibly consumers spent all their money in Q4. We had a strong Q4 as a result, and now we're out of money. Who knows? Usually, the consumer doesn't act like a light switch, so to speak. So maybe that's less than likely, given that you kind of don't really turn the consumer on or off that easily. But there is still the belief that some of this forward-looking guidance could give us an indicator as to whether we should expect any kind of recession in Q1, Q2, Q3. I personally think there's a shot at a recession Q2, Q3 this year, although who knows? Maybe this forward-looking guidance will give us a little bit of a heads up. So that's what we're looking for. This week, obviously, we've got, again, Logitech, United Airlines, Monday PM. Tuesday, we'll have Verizon, 3M, GE. We'll have, let's see, there we go. We'll have Procter & Gamble, Johnson & Johnson, Lockheed Martin, D.R. Horton, Synchrony, Netflix, Texas Instruments. That's all Tuesday. Wednesday, we'll have AT&T, ASML, Tesla, IBM, ServiceNow, Las Vegas Sands, and there are others as well. I'm sort of writing some of the larger market cap ones here. Thursday, we'll get a lot of the airlines reporting, American, Southwest, Alaska, and Blackstone, Sherwin-Williams, a lot of variety. So this week we'll be getting D.R. Horton again, so we'll have builders, we'll have Vegas, we'll have Tesla, we'll have Netflix, Texas Instruments, Johnson & Johnson, Procter & Gamble. All of these are going to give us really, in my opinion, great insights into the consumer. Even, frankly, GE to tell us about, hey, how's the consumer doing with regard to consumer durable purchases, How about our washing machines? Well, I don't know, whatever. What are people spending money on? All of these are going to be very exciting bits of intel that in my opinion, should start showing us some sign of aligning with, frankly, what the Beige Book said. Beige Book didn't seem that happy. Beige Book kind of made me think, this is starting to sound a little recessionary. But will that lead to big cuts soon? Probably not. I think the Fed kind of honestly wants to milk us to guarantee their inflation goal, and it'd be a lot easier for the Fed to say, look, you know what? Don't hike in don't cut in March, and hold out a little longer. As you hold out a little longer, what ends up happening? Well, you just end up maybe setting up or teeing up for a bigger cut in May or thereafter. Although the market, at least as of my last check, let's double check now, still is about 50-50 that we're actually going to get a cut in March. We are, it's flipped a little bit here. We're now only at about 46.6% likely that we're going to get a cut in March. That's definitely flipped. I mean, last week around this time, we were like 80% certain there was going to be a March cut. And then you've had, obviously, some Fed speak since then, but I think it's pretty clear so far the Fed's trying to massage out this market pricing of a March cut. And what they did end up getting as a result of that, which, by the way, I've been saying for a few weeks now, like, I don't know, that is still a little smidgen too strong, but we'll see. But anyway, it seems like the Fed's trying to massage away that March cut, and they seem to be slowly succeeding with that, especially given that they've got the 10-year Treasury, 30 to 35 basis points higher than where it was at the start of the year. As far as some caddies to look for this week, let's see here. We'll write those down too. Catalyst. Let's see. Catalyst this week. So this will be obviously outside of earnings. So we'll have the Philly Fed manufacturing survey tomorrow. We'll have PMIs from the S&P for manufacturing services and together on Wednesday. GDP annualized for Thursday. That's going to be your Q4 advance estimate. So we're still kind of looking back. Then we'll get into PCE. PCE comes out this week with personal consumption and core personal consumption, all expected for Thursday, along with initial claims. And hold on, let's see here. This is okay, let me read this correctly. Consumption and PCE index will come out on the 25th, which is Thursday, but the actual PCE numbers won't come out until Friday. Let's see, make sure of that. Let me get my calendar right here. It's too early to know exactly what this calendar means. Yeah, no, that's right. Okay, yeah. So the 25th is Thursday, initial claims, GDP, and then we'll have our PCE numbers on Friday, Fed's preferred inflation metric. For giggles, month over month is set to go from the negative 0.1 we had previously to 0.2 in December, with a year-over-year PCE figure sitting at 2.6%. With those are both month over month and year-over-year headline, and then the core figures are looking at 0.2 and 3.0. So we'll see what we get. All right. With that, let's go take a peek at what the hell is going on in the stock market. Well, basically up, everything except Tesla, of course. You've got, look at that. PayPal's up about 6% on Friday, and all of a sudden 3% pre-market. I think this is where you're going to find this weird rubber band thesis starts becoming more of a reality when you have companies like NVIDIA. When we got the breakout on NVIDIA, which I've been really watching for this breakout, as soon as we got the breakout on, 493 and the 500, well, look what happened. We're up 20 points in a span of a week and a half here. These put tension on the rubber band. Like, you've left a lot of stocks behind here. Yeah, a lot. And so I think what will end up happening is you're going to start finding institutions who have exposure to stocks that are doing very well, like your NVIDIA, your Microsoft, whatever. And slowly, some of that money, or new money, rather than continuously getting allocated to these, eventually starts picking up what looks relatively cheap compared to everything else. And I generally see stuff that looks cheap as either stuff that's a value trap and trending towards bankruptcy, or that's frankly waiting for its opportunity to play catch up with the rubber band. I don't know if there was news. We're going to find out on PayPal right now. But I do think the rubber band analogy holds true over usually a 2-year period. As far as PayPal, it looks like their CEO was on CNBC. We have done too many acquisitions. We may move away from unprofitable businesses ahead. It's all about execution this year. Aiming to right-size the business. Okay, that's an interesting phrase. I think we're going to hear a lot of that in this earnings season. In fact, I'm projecting that this earnings season will sort of milk the phrase right-size the business more than they mention pricing. I think that it's not sexy to talk about pricing when you can't raise prices. So, I mean, of course, some companies will talk pricing, so we'll get plenty of insight there. But what's really bad is this potential of larger layoffs being foreshadowed. We'll see. But that would be very interesting. So if we foreshadow a lot of layoffs then does that wake the Fed up? Who knows? But anyway, that's we'll get some color on that in earnest this week. This right size phrase though is very common. All right, inflation expectations are ignoring Europe's freight cost jump. Yeah, because inflation expectations are consumer price expectations. Nobody cares about the freight costs. But yes, Shanghai to Rotterdam, which is basically up the Red Sea and then all the way around, except now it's around Africa and then all the way around Europe. It's up 243% on the 1 month. Wow, it's pretty expensive. Double from Shanghai to New York, roughly double Shanghai to LA. That's crazy. Why would Shanghai to LA have been affected? I don't know, but it is. I'll take a screenshot of that little chart and we'll throw it on eHack in a minute here. But that is interesting. So let's see here. We'll call it freight costs. Change in freight costs 1 to 3 months. Yeah, fascinating. Okay. So let's take a listen in over here, and I'll keep yapping.
So we should go ahead and cut rates as far as we can to get the economy juiced as far as we can. I haven't heard too many people come up with this theory that it's going to be Democratic staffers at the Fed who are pushing a narrative that doesn't exist in terms of a recession.
Right. Well, the bottom line, though, is that inflation is not under control. The Fed's job is to get inflation under control. And if they cut rates with a kind of strong economy and high inflation, then we have to come up with a theory of what the heck are they thinking. Now, Becky, I'm sure data can turn. You and I have been talking for 20 years, and there have been times when we've been really shocked by the jobs number that came out when I was up at the studio in New York. But the point is the odds of a big economic surprise between now and May are not 90%. But 90% is what the Fed funds futures are saying the odds of a cut in May are. And so I don't know where numbers that high with that much certainty for rate cuts could possibly come from, because the economy is uncertain, right? So maybe it's 50-50 it gets worse. I don't think it's that high.
The other theory that's been thrown out, Kevin, is just this idea that we're going to have problems that come up in the banking sector at some point because commercial real estate or some other big kind of bugaboo comes out and you run into real trouble, and that causes financial system concerns. I guess the other reason would be we've got this huge federal budget deficit that needs to be financed, and high rates hurt that and have that impact too. So I've heard all of those kind of theories out there. But the Democratic staffers one, that's kind of new, especially when you look at somebody like Jared Bernstein, who is the CEA chair now, who's basically their big argument is trying to say the economy is really great because they want to convince voters that things are great and to reelect their candidate.
Right. And the fact is that I mentioned it in the National Review article that you cited, that 95% of political contributions by staffers at the Fed go to Democrats. And so I can say, though, that, as you know, and in my article, I say I don't think this is going to happen. I think the futures markets are going to be surprised that the rate cuts aren't going to come. But I trust Jay Powell. I had lunch with him once a month the whole time I was in the White House. And he's a very good person, an honorable person who wants to do the right thing. But all the staff guys that are giving forecasts to these people are contributing to Democrats. And I'm just wondering, what's my theory if they start cutting rates in May? What's my theory of what's going on? And anxiously, I'd be saying it looks like they've lost their independence. And that's where the word lost comes from in the title of my piece. I think that if the Fed does start cutting rates with data where they are right now, then the Fed has lost. The political independence of the Fed is lost.
OK, let me throw another theory at you. And this is one people have brought up on the show. That is that they would start cutting rates now rather than later because they don't want to look political later if they were to cut rates closer to the election when the economic conditions might warrant it more.
I think that what the Fed needs to do, what do they say at every meeting? We're going to be data driven. They need to be data driven. And data driven is not an election date that was set when George Washington was president, right? Data driven is we look at the data and inflation is down below 2 and GDP growth is slowing. And
Kevin,
we're seeing
if they did look at the data, let's say October, and there was the potential for an idea of a cut based on the data, and they went ahead with it, people would say they were political then, too. I mean, it just seems like it's a catch-22 for the Fed, no matter what they do.
You're right. And the Fed usually, as you get close to an election, just doesn't move. And so history is on your side with that argument. But the point is, again, like, what are the odds that the data really goes south? The odds have to be very high, like 80, 90% to start moving in May, given where everything else is.
Well, let me ask you this. If conditions remain where they are now for the next several months and the Fed does nothing, stands pat, and then all of a sudden you get into some sort of a economic downturn or even a fiscal or a financial system conditions warranting it, some concern around that, would you defend the Fed for cutting rates then?
Yeah, and I'll make a commitment with you right now. I'll come right on Squawk Box and say, hey, I've been looking at the data, and they're doing exactly the right thing. I think that's what central bank independence is all about. Is look at the data and do the right thing. Be an umpire at a ball game that's being checked by the computers. That's what we want out of the Fed.
Okay, fair enough. Kevin, thank you very much. Kevin Hassett.
Great to be.
Yeah, it's interesting. Mr. Hassett, I remember watching him during the COVID era. Getting that political jade, which Ark over at Brett over at Ark Invest had sort of a similar opinion. This idea that what if you want to preserve the dollar or minimize risk to the dollar, and I think it's worth watching the Ark Invest interview that I did with Brett. It's on the channel, but there's a section, it's timestamped, where he talks about the dollar and the strength of the dollar and the stability of the dollar. And his argument is, well, if the Fed's job is to preserve, with sort of a third mandate, the sanctity of the dollar, then you don't want Trump, was sort of his argument. And of course, people counter that argument and say, oh, but, Trump will have the strongest dollar ever. And fine. But the point is, his idea is that the status quo might be more predictable. And because it's more predictable, maybe a Fed that is biased against Trump is possible. Will be really interesting. I don't know. We shall see. All right. So, what else is going on? Let's take a look at this. So, PayPal's up in the pre-market. A good chunk of whacks all over the place. If you haven't noticed, by the way, hold on. This is a good one. There you go. If you haven't noticed, by the way, Nikki Haley, polls are polls, but Washington Post, Insider, CNN, Boston Globe, all of these different polls, there's all various different companies here, all of them are showing a substantial jump in voting for Haley. Now, I know a lot of people are looking at that going, why, yeah, propped up and ragged. But this is at least for the New Hampshire primary. Haley at 36 to Trump 55. That's some of the closest polling we've seen, and it's just representative of New Hampshire. But as DeSantis pulls out, this is definitely something that a lot of people are paying attention to, and so I thought that narrowing of the poll was interesting. But then again, it seems like sort of your Vivek and DeSantis votes are moving over, and those are what I've always been seen as sort of alternatives to Trump anyway. So are all the alternatives just sort of consolidating around Haley? I don't know, but that's what some people think. All right, what else? So let's find out what else we have. So inflation in the U.S. seen as undershooting. Inflation in Europe seen as undershooting that of in the U.S. Yeah, dollar long steadily throwing in the towel. Oh well, yeah. I mean, I'm bearish the dollar right now. Somebody here, blue collared investing. You have Democrats openly admitting to switching parties to vote against Trump. Ah. Interesting. Yeah, just to participate in the primaries, eh? I mean, obviously, I know that's not a statistical argument there, but yeah, that wouldn't surprise me. But then again, there are also a lot of Democrats who are quite fed up with their party. So it's also very popular right now to vocalize that you're leaving the Democratic Party, right? It's not very popular to say that about leaving the Republican Party. Well, just the way trends are right now. Anywho, so, okay. So, SoFi's 4%, moving there with PayPal. Palantir, couple percent. Palantir back over 17. Intel up a couple percent, almost back to 50. Let's take a look at Palantir just to see what we set up here. Palantir is kind of in this mid-wedge right here between the 100-day and the 200-day moving average. Be interesting if we can really press through that 100-day moving average. We've got, let's go back to it here. Okay, Wayfair. Wayfair started moving up ever since they conducted those job cuts. We go to larger layoffs. Yeah, no massive moves otherwise. So just the fact that Nvidia is sitting at 600 is pretty wild, though. Neo down again, another 4%. And this is just like a full-on bleed out right here. And I know EVs got hit pretty hard at the beginning of the year here. Rivian, Tesla, others included. But, oh, man, Neo, the pain just keeps going. We did a fundamental analysis on this in our course member live streams, which, remember, the next coupon expiration. I gave a lot of notice for this one. I'm pretty clear about it, but it's January 31st. And a lot of people really, still very, very interested in the Stocks and Psych and Zero to Millionaire Real Estate Bundle. It's all on meetkevin.com. You can see it. But anywho, the fundamentals on Neo, boy, I mean, they were concerning. And so you could always look at the archive of these analyses that we do in the course member lives. Anyway, okay, how's Home Depot been moving? Look at that. Isn't that crazy? It's just, it's like a consumer, the inflow of consumer staple money here, I feel like. Massive, delicious trend here. I mean, you could have just held through COVID, held through the last bubble. It's crazy. All right. Microsoft. Let's get back to some of the news. Yeah, wow. Look at Microsoft. It's trying to get to 428 over there. All right, new equity highs bring new equity buys. Okay, it's an interesting rhyme. Much of the great bond return faces headwinds on Fed uncertainty. That's fine. Wall Street eyes another record high. That's just crazy. But that's the way the economy works. The economy does its slow and lagging stuff, and the stock market tries to predict it all and place bets, and then sort of adjust to the odds as the new data flows in. All right, let's listen in here for a moment.
Looks like from the small amount of information they gave us that this was a pretty simple kind of attack called a password spray, something that could be prevented by two-factor authentication. And Microsoft was not enforcing their own policies on certain systems. They've promised to do better. It's hard to judge how big of a deal it is until we get more information. And to me, the bigger deal here is that Microsoft dumped this out with a small press release and an 8K on a Friday evening after the markets closed. They clearly wanted to bury the news. They clearly don't want to talk about it. And that's a real problem. One, because Microsoft is possibly the most important tech company on the planet. Again, up there with Google and Amazon of the same kind of importance of the data they hold. And second, the SVR is going after hundreds and hundreds of American companies. And with Microsoft not being transparent and not being open about what's going on, it does not rebuild the trust people have in them,
so
nor does it allow the rest of us to protect ourselves.
Can I ask a question related to that? You talk to security professionals, peers.
I don't really care about this. It's not my problem. Microsoft is stupid and doesn't enforce their own policies. So, yeah. I'm going to do something else. Mike Wilson has a new piece out. So, let's take a look at what Mike Wilson is recommending. Waiting for this to pop up here. But he starts with, we recommend a quality growth bias, as the cohort's relative performance over lower quality cyclicals is strong in decelerating front-end rate regimes, and the group is showing relative strength from earnings revisions. How interesting. So, Mike Wilson, the good old bear, is now suggesting a quality growth bias. Okay, so as opposed to lower quality cyclicals. Well, we'll have to see exactly what he means. Strong double-digit relative returns over lower quality cyclicals. Okay. Front-end rates peaking. Let's see, what else? Today's report. Takeaways. We find software and services, capital goods, and commercial and professional services have the most attractive risk-reward. Now, see, now it's gone from bear and sell everything to, okay, buy this. All right, that's fine. That's fine, Mike Wilson. Feedback from investors. There's not much conviction about how this year will play out. This is due to the still uncertain macro. Yeah. Soft landing remains consensus, although many would ascribe a lower probability than typical. Okay. Any let me just scroll through here and see if we've got any tickers. Oh, I think we do. These are sectors. Give me tickers. Oh, high quality growth. Okay, here we go. Wow. Trade Desk is in there. How fascinating. That's still stealing mine. Right there next to Match, Netflix and Google, Live Entertainment, T-Mobile, TJ Maxx, Nike, Wayfair, bro. What? Where? Costco's in here, Monster Beverage, Colgate, Elf Beauty. Why do I feel like this is just like all companies? There's Nvidia, Microsoft. I mean, this is just like sort by popular companies right now. Okay, that's weird. All right, well, the metric they say is quality is a composite of accruals, earnings stability, profitability, financial and operational leverage. Growth is classified based on dividend yield, price to book, total debt to market cap, long-term growth rates. Palo Alto Networks, Salesforce is in here. Yum Brands, Lulu. How interesting. See, just in contrast, I'm bearish on anything that really your potential lower 50% it might be discretionary on. So Nike, Lulu, Target, Costco. I'm not sure how MasterCard and Visa will get hit, but probably also. Like Amex would be more insulated here. Well, I wonder how their stock's been. Nvidia is going to be fine. You know, some of these will be just totally fine. Ooh, this one too. But I really want to buy into it. I've been wanting to buy into it for a while. I should have bought it. But I think you'll have a slowdown in business creation that could potentially hurt upgrades over at Intuit. And once that growth rate gets hit, you get a little bit more of a oopsie-doopsie wake up. I don't know. But, wow, that's a long bullishness list. Let's see, and we'll look into it in just a second. I want to see, is there a bearish chart? What's this? No. Those are all factors. A lot of this is just how they came up with it. That doesn't really matter. Just want the bottom line, bro. I guess. See, that's really interesting. So, broad consumer cyclicals. See, I agree. I agree with this. You know, this could be like Kroger, for example, groceries, just basic everyday things that people would just have less money for. And then he's still overweight. Healthcare staples, utilities. I disagree on that one. Yeah. I guess staples, though, this would probably be a better way to look at your Kroger's up here rather than your broad consumer. Yeah, I guess I shouldn't have said Kroger in the cyclicals. I misread this. Staples would be like your Kroger's and that. He's bullish on those. As far as consumer cyclicals, this would be like washing machines, cars, You see this in the durables. So washing machines, cars, things that people stop buying in a downturn cycle. But I think you have to balance this with what wealthier people want to buy as rates come down. So I would say like X wealthy people purchases as rates fall. So I guess maybe I don't fully agree with that. I misread that. There we go. So we'll erase the I agree. There. Yeah, but I would be more bearish staples. All right. Let's listen over here.
Upcoming medical meeting, you're looking at that stock down this morning, a little over 8% on the back of that news. Becky?
Just over a half an hour to go till the opening bell on Wall Street. For more on the markets week ahead, we want to bring in Sylvia Jablonski. She's the CEO and Chief Investment Officer at Defiance ETFs. And Sylvia, we are talking about the markets closing at new highs. How do you feel about those things? What do you expect stocks to do this year?
Good morning, Becky. Great to be here today. Well, I think if you look at where we are now, it actually took us, close to 2 years to just get back to where we were on the previous S&P 500 highs, that 4,800 number. So I'm very, kind of happy that we're here. And I think that the market is poised to continue to rally and do well this year.
Okay, fine. Here's a question. Does the Beige Book data make you slightly more bearish on PayPal? So you have to kind of align this also with just like what the stock has done, right? Because like you could take really bad news and throw it on a company that looks like this, and it's kind of the rubber band in the opposite direction, right? Like, how much worse can it get? Yes, I know, $65 worse. I get it. It could go to zero, but that's highly unlikely for PayPal. So then you look at it and you go, okay, well, like at some point, some companies just become so relatively cheap to others that even more bad news can't really hurt them much more. Just because people start buying the dip on them, So no, I don't think the Beige Book data affects PayPal. I think the Beige Book data forecasts big fat layoffs coming. And it'll be really interesting to see how quickly they come. I think they all come at once. I don't know. We'll see. Here's Bitcoin, by the way. Coin, which is like one of your proxies for Bitcoin price action. Coin's really interesting. I do this. I want to do this more with with just sending ideas out. But what was funny is Coin. Look at this right here. Coin bottomed out. Wow, look at that. The end of the bottom was over here at right around Eastern time, 12:10 to 12:13 on Coin. And I sent an alert to everybody in the Stocks and Psych group. I said, hey, I set up a buy limit to cover my short at 118, like 06 or whatever is what I posted in Discord. And I sent a little alert going, it's at 118 now. Like this is where I would have covered just based on fibs. And which is really interesting because it went to 118.03. So I sent the alert at 12:13 Eastern time, which was right there. And it's basically sitting in the bottom there for about 5-6 minutes. And then it actually recovered from that moment. I thought that was really interesting. That was all fibs right there too. So just some basic TA. So, but I thought that was interesting because when I entered my short, I said I cover by 118, unless I cover before that. So I thought that was really interesting. So I don't know, maybe I got lucky on that one with the alert. But anyway, okay, what else? So let's see what else we have here. Hut 8. Oh, I visit them next month. I want to see their mine in Texas. Apparently, I thought they had a big mine in Canada. I wanted to go see. I'm like, oh no, meet us in Texas. I'm like, okay, all right. Let's see what we got. We don't want to find a boxable. We want to find good things. Boxable. Oh, Boxable. All right. What else? Let's see here. So we are value stocks will be a value trap for now. Investors looking for cheaper deal in value stocks after tech's mega caps run to record highs may need patience. It's interesting. It's almost like they're kind of like trying to borrow the rubber band analogy, but then argue that you still need to be patient on value stocks. Okay, fine. Then we have Tesla earnings this week. Those are going to be fascinating. Mostly Tesla like almost always goes down after earnings. So a little bit of a bummer. We've already had so much of a sell down before earnings, but whatever. At this point, if you're not used to the roller coaster, you probably shouldn't be in it. Where was this? I just saw something interesting. Wow. Wilson Racket Maker to seek $1.8 billion in IPO. That's interesting too. And then I heard Red. That'll be interesting. And then, wow, this is also interesting. 11 Labs. Voice cloning AI startup 11 Labs valued at $1.1 billion. Andreessen Horowitz, Sequoia, and others invest $80 million into the startup, valuing them at $1.1 billion. That's wild. So it's funny, we actually used, does anybody remember when we made the Tesla ad? We took a pretty famous actor and we 11 Labs them and basically made them do an AI ad for Tesla comparing, why would you buy a Camry or Corolla or whatever it was if you could have a Tesla? Specifically, actually, the quote was, "Whose balls do I have to fondle to get a Tesla instead of a shit Corolla?" Yeah, so we used 11 Labs to manipulate that voice. It was really interesting. Yeah. Anyway, that was fun. For the time that lasted. But yeah, okay, wow. That's very interesting. Yeah, I think you'll have very few of these that do really well. Very few of these AI startups that really crush it. Yeah. All right. Let's take a listen over here.
Before the huge blowout, he had that great call on NVIDIA.
Well, he was asking me about my dog.
And he's talking now about software.
My dog, the stock was at 50 when I...
Why do I go to CNBC and it's just Jim talking? At least we're talking about fondling ball. Okay. So, Plug Power up 6.2. Yeah, this is tough, man. Hydrogen startup over here. High spec, high risk, way out of money too. And so that's what continues to drive them into the poopers right now. Tesla just turned negative.
Lost the lead.
And yeah, Plug Power took a $1 billion shelf offering, so you're gonna have a lot of selling pressure. Remember, in case you don't know what a shelf offering is, I think it's really easy to picture having a shelf and then having a bunch of potential shares on that shelf, and then the company can kind of just dump them when they want. So it's kind of like you put them on the shelf and you told everyone about them. And then every day you're like, yeah, let's dump a little bit. Yeah, let's dump a little more. And you can kind of regularly do that whenever you want, when the market conditions are desirable for doing that, which usually means the stock goes up a little bit and then you dump. So you kind of keep doing that. It's actually very common in REITs to do that, mostly because you're continuously expanding the asset base and therefore preserving the dividend. It's not the most common for other companies. They'll sometimes do more of well, AMC did it. But anyway, yeah, you'll see it. Anyway, okay, coins down 1. What else do we have here? Q's up 45. I thought we were actually a little higher. Yeah, we were. So a little bit of a relaxation here going into the open. Although still, NVIDIA is still knocking on the door there of 600. All right, let's see what some of the other suits are saying. So we had Morgan Stanley there. Morgan Stanley's Mike Wilson talking about what stocks to pick. It is so weird. to think of Mike Wilson as pointing out what stocks to buy. I thought it was cash and gold, man. Anyway, Standard Charter. Will a renewed Fed put take the USD lower? Yes. Yes, it will. So let's see here. Falling inflation and high real rates make the Feds attentive to any significant activity slowdown. Moderate Fed easing consensus. The main risk scenario is sharper easing on lower inflation. Duh. The sharp easing scenario is a likely USD negative. Correct. Shorting the dollar. Let me see here. See if we short the dollar. Let's go like U down. Well, psychologically, it'd be better if we look at U up, because then down is down. So, okay. Here we go. Wow, look at that plummet in the dollar. What happened there? This was right after the Fed meeting. Mid-December there. Holy smokes, that dollar got crushed. Okay. Anyway. Okay, this is a really interesting retracement setup here. It's almost perfect. It's almost like working. Look at this. Rejection, breakout, rejection, breakout, rejection, pulls down, support, almost a rejection, almost support, almost rejection. Like, this is a little less clean right here. Failed breakout, all the way down 2 fibbies. And this is where you start bouncing. It's not perfect by any means, but that's okay. So where do you go next? Well, I mean, I guess let's look at the long term. That was the week. Yeah, I mean, frankly, you're probably going back down to 0 on the fibs here, if not even lower. I mean, look at 2014. We went mega low. So there's probably a short potential here on U up. Down from, well, and you kind of have to time the short-term trade with what the Fed's going to do. So here's what I would do. Okay, I'm going to write this one down. Okay, hold on. It's a short, so I got to get the red notepad. All right. Here we go. So, when the Fed doesn't cut in March, so when, or when that cut is unpriced, when March cut fully unpriced, so basically when the market's like, all right, we're not going to get a Fed cut in March, then short dollar, which you could also do, by the way, by just going long U down. UDN. So long UDN is a short. But again, I think the market prices in its Fed, or prices out the Fed cut March. And then that becomes an interesting play, because then I think then it has more room to fall. Because after that, I think we start getting our cuts. That's an idea. I'm going to take that sticky and put it on my computer screen.
Really made me feel like the EVs, it's pause or is it done? It's either pause or done. Now, we do know.
His price target is still 345.
Well, yeah, but that's.
I mean, why do you.
So you can say it if it's really good.
Challenging year, and now our price target is only still $120 above where the stock is.
What, is it supposed to, like, lower it by 100? I mean, look, he's saying that there's still some AI and robotics thing going on. But I thought this piece read, this Tesla piece, this read like, look out. You know, you're not going to have a great quarter, so therefore I had to drop it I had to get rid of Mag 7 when Super 6.
Sees further price cuts coming, as Carl said, expiration and weakening of EV incentives. We know
you
about
should
that
read.
as
You
well.
should read this before the show, Dave. You shouldn't just say, "Oh, expiration,
I know.
weakening
I
of
see
EV."
you've got it all.
All right, well, that's boring. All right, so what else? Let's see here. Okay, risk appetite. USD could weaken somewhat under the consensus scenario if yield backup occurs. Okay, I mean, this is just like hedging their commentary here. Optimism is driven by low inflation expectations. Okay, so something to know about inflation expectations is I like watching the Zillow rent market trends because it's sort of like a leading housing disinflationary tool. And most markets, rent is coming down. And it's a great thing for people. I mean, look at this. Miami year over year down $400. Okay, this is going to get worse. Dallas down $109. If you go percentage based, that's like 5%. Orlando's only down $54. They're actually doing decently. Phoenix, $70. That's not that bad either, actually. San Diego, California, $200. It's like, what is that? 7% or something like that. But it's really interesting. You can kind of see this, like, they give you these little charts to compare. Okay, good. So, what else? Yeah, so I would watch it. Oh, this is interesting. I didn't know you could do these. You could specify houses only. Ooh, LA houses. $500 decline in LA houses. Wow, that's 10%. And then you go to Dallas, it's only $25, which is like 1%. Miami, $538. Miami and LA about the same. New York though, for up $350. The other thing is, like, when does it become time to buy the dip on San Francisco? San Francisco. Negative 305 on houses. What about apartments? Apartments and condos. Plus 70. Ooh, that's interesting. Market temperature, warm. Anyway, enjoy this kind of stuff. Somebody writes, my girl and I are about to buy a house. Don't scare me, bro. I don't think you need to worry too horribly much right now. I think the biggest concern is where institutions offload. Where institutions offload, that's the poopsie doopsie. What about... Oh, let's do... Okay, I think... All right, I'll look at your Trueflation. So, isn't that put together by the... Let me see here. There's one of the Fed groups likes to do an estimate, but I'll just... There it is. Cleveland. Cleveland does it. So let's take a look at this. Here's Cleveland. Inflation nowcasting. Ooh. See, this is warm again. Core CPI, 0.32. That's what we had kind of last month, and they were right. So you have this sort of firming up of some of the core data. And so that'll be really interesting. I think that's going to contribute to the Fed unpricing the March cut. Is that firming there in the core CPI projections? We'll see. But that's not fantastic. And then, yeah, the 210s is going a little bit deeper into inversion right now. We're 29 basis points inverted. I'll write that down. Yeah, we're going into the day with 29 basis points inverted. Okay, there we go. And then let's take a peek here at Trueflation. What do we got over here? Oh, okay, well, yeah, this is not where I wanted to go. There we go. All right, next, let's take a look. We've got 15 minutes for the pre-market. Pre-market. All right. Where do institutions offload? Yeah, Oleg, that's a good question. So I believe that institutions offload in basically the places institutions went in 2021. So, hold on, inverted yield curve at negative 2.9 today. There we go. Just want to throw that in there. So that would be, frankly, Tennessee, Florida, Texas, Arizona, Vegas. a lot of very how do you say like COVID markets basically, right? Idaho. I think that's the biggest risk. Is not it's not actually that people won't there won't be more people who buy homes when rates are down. There will be. There will be more people who buy homes as rates come down. But if inventory skyrockets, more than buyers enter, then you end up with more pressure on the real estate market. But it's okay. I don't know how damaging that will really be. I personally think that's what keeps a lid on prices running away. Like, I don't see prices running away. I think there's time for patience. And I think there are opportunities in multifamily, but you have to be careful because you have to re-underwrite a lot of these rents. A lot of the rents are poorly underwritten. So, yeah, watch that. Okay, let's see how our Qs are going into the AMs here. So we've got 47 bips. Kind of relaxed there a little bit going into the open. You know, Tesla's green barely by 6 basis points. You've got Nvidia up 1%, which this will be fascinating to see if they can hold on to 600. I mean, there's nothing really out there here for them until you get to 791. You're almost just gonna have to rewrite these, but your TA on this. But boy, you're just like, you're at an 80 RSI. Like, Nvidia needs to come down. Right? Like, it's crazy. Yeah. Building like crazy here in Fort Worth. Actually, that's exactly one of the markets that I was worried about. There are so many new construction apartment buildings, and they're still building. So it's wild. Less inventory will come to the market at 5.5 rates. People still sitting on 3%. More buyers will flood to a limited. Yeah, I'm not worried about home buyers with a locked-in 30-year fixed-rate mortgage. That's why I said institutional selling of single-family homes. They're going to take their tendies that they got from 2021 and 2, and they're going to sell them to reallocate to stocks that have gone up, right? Ryan, just email me, kevin@househack.com. And, yeah. But usually we're looking at, like, if we can be at 80 to 100K for 500K deployed in equity, right? That's usually where we like to be. Again, it doesn't matter what people's lock-in is if it's institutions, right? Baba dropping. Yeah, I actually, we joke a lot about Baba in the office. The problem with Baba is first of all, like, you could have bought the dip a year ago and it would have just kept dipping. So it's like, where's the end? I don't know. Nobody knows. So the question is, but then again, it looked like we bottomed out around 57. We're almost at that bottom again. The problem is, you're basically betting on the growth of the Chinese consumer while China's economy is expected to face population decline, which I think is very interesting. Yeah, very interesting. So it's like, what office? Well, you have like 10 people working in an office every day, man. It's freaking awesome. So, it's a lot of stuff we got going on. We're thinking about probably doing another round of hiring interns. I don't know, maybe. All of our interns stayed from last year and got permanent jobs, but we're gonna need more probably soon. We'll see. So anyway, okay. Let's Q's 46 bips. Do I pay interns? Of course I pay interns. It's actually very challenging to like, people are like, I want to work for you for free. It's actually very challenging just because there's so many laws around working for free. No, of course. So we pay. But anyway, SoFi comeback. Let's look at SoFi. SoFi. Okay. So, yeah, look at that. SoFi's having a little bit of a pop. Let's go to the hour chart here. Yeah, look at that bounce on the fib. If you don't have this fib set up on SoFi, you're making a mistake. Look at that. Oh, wow, that's glorious. Okay, so you know look at the convergence that's happening here. Right there, okay? If you can break 790, I think you're going back to 880. Because you have the convergence of the 100-day, 200-day, and a fib retracement, which SoFi's been pretty respectful of the fibs. Look at that. You're riding a fib. When you break through, you go to the fib resistance, fib brief support, but also mostly resistance. It hangs out at this fib. It's always hanging out at the fibbies. So SoFi's clearly a, basic trade stock. NEO always down. What do you think? Well, you should see the fundamental analysis we did on them in the Course Member Live. Let's just say I'm going to turn my coffee cup to this side. Yeah, as I talk about different stocks, I should sort of like rotate the cup around. There we go. All right. Bro, I texted an agent. Hey, any offers on this one? Blah, blah, blah. Good morning. We have 15 offers and we're over 1 million. Damn it. It wasn't that bad. All right.
The premise, and the reason why I bring this up is Carl said something very interesting, which is really the market's very limited. Healthcare, right? And then the Super Six followed by others, the fellow travelers. This bank, okay, Citi, is loved by one of the great showmen of the banking industry, which is Mike Mayo. And he did Citi, number one pick. Warren Buffett supports the restructuring.
Mike Mayo sat at the very beginning of the year with us and went through all the reasons why. Basically just... He kind of indicated it would be hard if they follow through on their plans. It's going to be hard for them not to do something positive.
Right, has not backpedaled on guidance. The reason I think it's important is that the banks really laid an egg. Even the regionals I thought would be a little bit better. Markets downgrade today. We need this group as a leadership group, and it's done nothing.
Ooh, this is an interesting note. So here's a note from JPM. I'll save this one really quick. All right, it says there are two parts: why stocks should sell off, and why stocks should rally. So they actually give both points of view. And I think it's worth hearing it because then you can decide, well, what do you align with? So they posted this about, this isn't like the most super fresh, but it's within the last week. So why stocks should sell off. Positioning. Intel, I don't think the company, I think they're talking about intelligence, goes through the rationale. The Fed expectations are too dovish. Calls for a March rate cut may prove premature. That I agree with. I actually don't think the Fed is going to cut in March, and I have consistently said that for probably a month and a half now. But anyway, Fed expectations are too dovish. Well, I think they're too dovish. In other words, I think too many rate cuts are being priced in now, but I think too few rate cuts are being priced in at the end of the year. I think it's funny the counting of 5 rate cuts. It's I think there's a chance it's gonna be 10 to 12, or we just have 50 basis point cuts. If I'm JPOW, what I'm doing is I'm sitting there going, well, we want some more data on making sure that core CPI is coming in. We don't want to be Arthur Burns. Maybe rather than going and starting the 25 basis point cut cycle and then leading financial conditions to loosen, let's keep financial conditions tight a little bit longer, and then let's go 50 basis point cuts maybe in the summer, right? It could be May or June, and you could always start with 50 if you wanted to, and just set that precedent. Nothing says you have to start in March and go 25s. So anyway, that's sort of been my POV. By the way, do you like my spider jacket? I liked it. I got it in Park City, so I probably overpaid for it. But I thought, oh, see, look, Park City. It's got the little Olympic thing and everything. It's kind of cool. Anyway, where were we? All right, here we go. So over the last 25 years, January, what is this? Positioning. Okay, earnings. With tech expected to do the heavy lifting, it's possible that we see a series of disappointments ahead of megatech earnings, the bulk of which occur between Jan 24 and Feb 2. Yep, that's now. We're going to cover those. And then why stocks should rally. Growth reboot. The U.S. appears to be experiencing a rolling recession. Okay, wait. Rolling recession is under the stock reboot section. Yes, I actually agree with that. So, like, you had the freight recession, you have the right sizing in different sectors. We could see a rolling recovery take hold with growth data inflecting higher as soon as this week. If we continue to see growth without inflation, this could result in a steeper yield curve. Totally agree. Growth without inflation. Growth without inflation. Additive for cyclicals. Okay, Enphase, Tesla. That's all they said right there. Those are the only two that matter. Okay, maybe I'm just trying to pump the bags. Okay, come on. Anyway, the combination of rate cuts and slowing halting of QT is a powerful tailwind. That's a good point. They are already talking about slowing quantitative tightening. Powerful tailwind. Could occur as soon as March. I don't think so. And then the Fed would have to intervene with a form of QE. Disinflation, while there are near-term price risks, primarily from the Middle East, no. We may not see the brunt impact in the U.S. from a pricing perspective. Core PCE is tracking below 2%. We may see another bearish argument removed, dovetailing with rate cuts. Right. Long tech and cyclicals. Yeah. You know what? How about forget long tech and cyclicals, and instead you go long tech cyclicals. Again, that would be, and like Enphase and Tesla are like the definition of tech cyclicals, whereas tech would more ordinarily be like let's say Google, Facebook, Microsoft, not necessarily so cyclical. Nvidia, which could even be counter-cyclical to some extent, and then a cyclical in general would generally be like an autos or home improvement, restoration hardware, things that go with the cycle, right? That's why it's kind of funny if you merge them together. There are actually tech cyclicals as well. All right.
Their stuff. They're still in back order, but they're the winner, and I think that people keep wanting to chip away at what they have. But David Ricks is quietly so much more competitive than people realize, the CEO. So all of these different offerings that people talk about, that's like everybody's offering something. It's like NVIDIA. These are the two. You can't beat Lilly and you can't beat NVIDIA. Not right now. They're too far ahead.
Big piece in the Washington Post about drug prices. They say that the White House sees it as a potent issue that they're going to talk a lot more about in the coming months.
Well,
will political risk creep in?
I think they've already determined.
Somebody here says, or is wondering, thoughts on oil and thoughts on buying more Intel. Okay, so I don't think Intel is fully priced yet. Okay, so I started buying Intel like $29 to $31-ish. Personally, I think it's like 60 to 70 before I really start scratching my head going, okay, is this overdone? I've said NVIDIA in the high 600, 700 range. That's where I start going, I don't know, man. I'm getting a little rich over here. And, it might close over 600 today. So, you're starting, and then you look at an RSI of 80. Oh, man. Maybe it's time for some covered calls on NVIDIA. Let's look at it really quickly here. Let's look at the volatility. I know we've got the bell here momentarily, and then I'll look at oil. But quickly, HVG. Let's do volatility on NVIDIA. It's mid-range. Yeah, pretty mid-range. Okay, let's listen in here. And then oil, it could be stuck in the mud for a while here. I don't know that it really has to break out of 70 to 80 anytime soon, unless we really hit recession, then it will.
People survived was indeed a villager. Now, David, one thing you need to know about Lilly, and I know this from the work I did with the American Brain Foundation, we have yet to see their dementia drug, but apparently the numbers are fabulous.
That would be a wonderful thing.
Let's get the opening bell here in the CNBC Real-Time Exchange. The big board. Air taxi service. Archer Aviation celebrating its partnership with NASA. At the NASDAQ, it is financial holding company NBT Bancorp.
I know that
Archer's ringing the bell? I don't know, man. Get him off the stage. I like how people ask these questions as if that's not what we do on a daily basis. Is House Hack still buying houses? What do you think we do on literally a daily basis? It's our job. It's like, is the Pope still Catholic today? Ooh, I wonder. All right, so let's see how things are moving. SoFi 5%. Let's go. Really getting that. Oh, look at that! It's at the resistance 792. Let's see what happens. 3% on PayPal. Enphase trying to go 2.6% here. Nvidia 0.5%. Tesla's bobbing around, losing the lead here. You've got Hut 8 Mining down 8%. A little drop there. Plug Power's up 3 after being up actually like what was it 10 on Friday? I'm not sure. It was up quite a bit on Friday. Intel's up a couple points. Taiwan Semi holding on to its gains after it popped all the way up to about 110. Trade Desk got a couple percent. Oh, look at Affirm. Wow, 7% on Affirm today. Oh, snap. Let's take a look at Affirm zoomed out a little bit over here. So this is Affirm on the week chart here. Probably have this fib spread out a little too much here, but anyway, that's one to keep an eye on. Then you've got, what do we have here? Apple, 60 basis points. Who got the Vision Pro? Who got, okay, let's put it this way. I'm not going to say who got. We're going to do a quick poll, okay? We're going to run the poll, and I want to see what people say. Have you or will you get the Vision Pro? That's going to be the poll, okay? Have you or will you? Now, that's important because that means even if you haven't yet, I want to see if you're going to. So let's ask a poll. Start poll. Have you or will you get the Vision Pro? Yes, no. No, I won't get. Yes, I will get. Okay, I just pressed the poll button so you could actually vote. You don't have to write it. I did, but I canceled my order last night. Doobie canceled their order. Doobie, why did you cancel your order? All right, as I say that, Apple, like, skyrocketed here in the candlestick. I mean, we're just on the minute candlestick, so it doesn't really matter. Costco's flat. Oh, I just lost the lead.
Lost the lead.
Oh, now it's back green. Dang it. Anyway. Enphase running a little bit here. You've got about 3.6 on Enphase. There's some momentum going in on Enphase as the day starts here, as well as SoFi. It just pushed through on the 1 minute. Just be careful trading on the 1 minute. Obviously, they can be very volatile. PayPal is giving up a little bit from what it had pre-market. Yeah, PayPal doesn't. People seem like they're playing the Enphase or SoFi trade today rather than Coinbase back up 1%. Nvidia is holding on to about 600 there. Tesla down about 1/3%. Another red day. Intel 49. Affirm's at 8 now. And let's do. Ooh, Cloudflare up 4.9%. Wait a sec. Let's look at Cloudflare here for a moment. Let's go to the week chart. Look at that. Oh, Cloudflare's at a breakout point. Wait a second. We're going to have to write this one down. What do we got over here? 80.94, close above 80.94 is a potential breakout point. It basically closed there, and then today it's trying to push through. There's some bullishness coming into their Cloudflare, so I'd watch that one. Long net over 80 breakout. I'm writing that one down. All right, then we've got, how interesting. Oh, Trade Desk, Neo recovered some of its loss here in the AM. Look at that. Nice little pop off. When's Ulta going to start crashing? It's back into its trajectory right now. So probably it's at the low end of this channel. And supported by the 100-day as well. So watching Ulta. How about Intuit? I was going to look at that one. Intuit. Oh, yeah, and then we got to see what the poll results are. If you haven't yet voted in the poll, vote now. Or forever hold your peace. Dang it. I want to own this company. But this is stupid. Yeah, that Enphase run keeps pushing 4% right now. So we'll see how that evolves. Okay. What are they saying over here?
Yeah, well, Meta's got, people are saying that remember I told you the
10%
sunglasses
this
are real.
year. That follows on incredibly strong performance last, of course, as investors rejoiced about.
Palantir, everybody's freaking out about Palantir. What, it started up like 2 or 3% this morning. Oh my God, it's up 7. Bro, what is going on? Let's find out. Palantir. Nothing. Literally nothing. Wow. Okay, there's no news. I love Palantir. I think it's one of the best, and frankly, only actually really profitable AI plays. Like, even 11 Labs, like, I know they have $1 billion valuation right now, but I'm like, man, are they really going to be able to monetize that, you know, to the, like, broadly? I don't know. So we'll see. Okay, then we have, but yeah, there's literally nothing on Palantir right now. That's quite fascinating. And let's see, actually, ooh, I want to see how bonds are moving with this rally here. Yeah, the suits aren't even saying anything. I think the suits are pissed. Stuff isn't going down. Well, some stocks probably are going down. Let's see here. We've got oil. Yeah, still stuck at 79 on Brent. I want to make sure I say that correctly. Bonds down 5.8 basis points on the 10-year. Under 41 on BTC, and then obviously pretty green here on the indices. Trying to push red here on the Qs. Enphase still pushing 5% here. Wow. Palantir pushing 7. Slight red candlestick forming there. Baba's down another 2%. I'm just not going to look at the one that starts with a T, because every time I do, I ruin it. AMD pushing a little bit of a sell-off. How interesting. People are starting to take tendies on AMD around here. RSI's at 76. That could also be a tell that maybe next you're going to start getting some profit taking there on NVIDIA, which makes sense. All right, Apple up 1.26% now. Look at that after the Vision Pro moves. Oh, Palantir co-founder was on CNBC explaining how money will be made? Huh. I don't know. I guess I didn't see that. I mean, I've kind of been watching the TV here, so maybe it happened in the early 5 o'clock hour. Oh, in an interview the other day. I see. Should be worth 60 bill. Oh, so maybe over the weekend or whatever. Yeah. Okay. Check out Open Door, 9%. Yeah, Open Door is like a speculative proxy. It's, in my opinion, a bad company, fundamentally. But it's perfect for trading because it's so freaking volatile. I mean, I remember I went basically bullish Open Door when it was like $1.70 because I'm like, bro, they're basically selling for under book value. And even their crappy, dirty books have value. Yeah, okay, fascinating. So, SMCI killing it again? Let's see here. SMCI. Oh, did S-Edge cut jobs? Yeah, that could be a mover for Enphase. Let's see. S-Edge. Listen, and this is scary, okay? Job cuts lead stock to go up, okay? But wait a minute. If companies realize, every time somebody announces layoffs, their stock goes up. Hey, what should we do to pump the stock? I don't know. Lay off people? That's fine for the companies, but it's also bad for recession if you get this sort of cycle happening. And yes, SolarEdge yesterday announces laying off 16% of global workforce. Sees charges of 59 to 66 million related to restructuring. SolarEdge gains as job cuts and restructuring plan come into focus. Yup. It's a good catch. All right, fine.
I'm just ambition. That's me.
Oh, let's look at the poll result really quick. The poll says, wow, 10% out of the 787 of you that voted, 10% of you said you are going to get it. So like 80 of you. And 89-ish% of you said no. Interesting. All right, what's going on with SMCI? Super micro, 10%. Wow. Yeah, there was a reason I'm not in this one. But whatever the reason was, when you look at that, it makes you wonder, like, is it wrong? Oh, that's right. They're more heavily focused on cloud and 5G than on AI. And I'm not saying that, you know, they can't do it, AI, but it's not the priority, or maybe it is now. I don't know, but that's I don't know much about Supermicro computer. I want to be very clear about that. Clearly, stock's doing very, very well here, but I've only briefly looked at them. So let's see here. Okay, what's ADM? ADM plunged as much as 18% after suspending its CFO and cutting earnings. Oh yeah, look at that. Archer Daniels Midland. But is it okay? They have the same name as the other Archer that just rang the bell. Archer Aviation, right? Yeah, here's Archer Aviation, up 11%. I don't know. I'm bearish on these eVTOL companies for right now. Who knows? Anyway, all right. Q's kind of bobbing. Oh, Coinbase up 3. Q's bobbing around over here, but actually it looks like they're trying to go negative here. Yeah, Trade Desk up 3%. Affirm's up almost 10. There's some real activity here. Let's see here. So DWAC, Archer, Supermicro, Affirm, these guys all up 10% right now. Open Doors almost 10%. Enphase is like 6%. Palantir 7.8%. SoFi 8%. Cloudflare, I'm watching that one. 5% on a potential breakout starting here. Trade Desk 3%. The only thing that never shows up anymore over here is Tesla. But then again, it is right before earnings. To the downside, you've got Alibaba down another 3%, AMD 2.5%, Ethereum's down 1%, Nike down 1%, Starbucks, Home Depot, Microsoft, Boeing, Taiwan Semi slightly negative there, but almost flat. What's this dude saying? Gilead CEO?
Not going to happen, it doesn't appear.
I thought that it could be a Keytruda.
Yeah, I don't know, just blabbing here. McDonald's. McDonald's has been absolutely killing it. It's really difficult to be bearish just their long-term performance. They make so much money on selling stuff to franchises. And obviously owning real estate. Yeah, it's a tough one. That's just wild. Anyway, okay, good. So what's next? Well, let's quickly take a look at what the suits have to say. Then we're going to go to course member live stream after I make another cup of coffee. Remember, if you want to join the course member live streams or any of the other programs on Building Your Wealth, we've got a coupon expiring at the end of the month, January 31st. So just being super transparent. I don't want to sound like too extreme or pitchy or whatever. And we've been so focused on House Hack right now. Although we're going to have some new lectures coming out as well. So it's sort of just working a lot. As well as the Stack Hack. We've got new Stack Hack financial advice videos dropping by the end of the month as well. Then, anyway, so what are the suits saying here? 5 reasons why Treasury prices can remain supported today. Economic calendar is light today. Bond investors have been adding longs after selling off for 3 weeks. 10-year hitting 4.2. Okay, technical levels, fine. Federal Reserve is in a blackout period ahead of its January meeting. Ah, that's right. So the Fed's meeting is Jan 31. So no yapping from the Fed over the next few days. That'll be really interesting. Somebody here says, I expect some pullbacks before the Fed's rate announcement. Yeah, their next meeting is on the 31st. So are we looking into shipping container homes? No. When will House Hack IPO? Well, who knows? Anyway. All right. Thanks, folks, for being here. I'm going to press this button now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. You know, I have to say what's really interesting is the queues are getting dragged down right now. But I'm trying to figure out by what. It must just be like Microsoft. Microsoft, Nike, Home Depot, S-Bucks. Some large companies over here are dragging the queues down. Oh, Intel just went negative too. How interesting. All right. Well, we'll pay attention to it. Anyway, all right. Thanks, folks, for being here. See you in the next one. Goodbye.